afternoon. Welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. These are your headlines for Tuesday, November 27th, 2012. U.S. Cyber Monday sales top records as online shoppers reportedly shelled out 30% more on those web deals than they did in 2011, using their phones and tablets to buy stuff. Is this a good thing for an economy in the doldrums, or does people buying stuff at Walmart that was probably manufactured abroad really help? We talked to Peter Schiff, and the White House announced President Obama will hit the road to sell his plan to avoid the fiscal cliff to the public. CNN reports, while Senate Majority Leader Harry Reid today said he is disappointed with the little progress made in recent debt talks, according to CNBC. Now, while we know the U.S. public debt is destructive, where is the dollar collapse people like Peter Schiff have called for? We ask him. And who does Warren Buffett think would make a great Treasury Secretary? Charlie Rose asked.
Appointing Jamie Dimon as Secretary of the Treasury.
Well, I think Jamie Dimon actually would be. I think he'd be terrific, because I think he, if we did run into problems in markets, I think he would actually be the best person you could have in the job. They're all.
What? Are we in an alternate universe? The London Whale Commander-in-Chief would be a great person to graduate to the Treasury? Oh my. Let's get to today's Capital Account. The trajectory that the U.S. has been on, printing money, expanding the Fed's balance sheet, making money free since the financial crisis, had some pundits predicting hyperinflation. But a funny thing happened on the way to hyperinflation. The U.S. dollar index, instead of collapsing, has gained value since 2011. Instead of seeing interest rates spike, we've seen U.S. Treasury yields collapse by over 60% since the 2008 crisis to new record lows. And we've seen these trends in the face of a public debt that continues to mount and a credit rating downgrade in the summer of 2011. And as we're beginning to be lulled to sleep by the constant hum of fiscal cliff warnings, we thought it was worth asking, whatever happened to hyperinflation? We asked Peter Schiff, CEO of Euro-Pacific Capital and author of the book, How an Economy Grows and Why It Crashes. What about hyperinflation? Because this is something that you have been hammering on since 2008. And I know that you're saying you can't predict when this is going to happen, but why haven't we seen that happen?
Well, I still say that hyperinflation is a worst case scenario. So I never say that we're going to have it for sure. We will have it for sure if we continue to do what we're doing now. So
which is what? You mean that the Fed printing money? Is that what you're basing that on?
The Fed printing money and government growing and trying to keep interest rates at zero. If we keep doing this, we will eventually have hyperinflation. So my bet is that at some point, the specter of hyperinflation is so enormous and the dangers are so apparent that will change. But before we get to that point, we're going to have very, very high inflation. I mean, much, much higher than anything we had in the 1970s. Okay. Whether or not you want to consider that to be hyperinflation, if inflation is 30% a year or 40% a year, technically is it hyperinflation? Probably not. It's pretty damn high. But I think it's going to get that bad before we actually have enough pressure to do something to turn the situation around. And believe me, by then it's going to be very difficult. It would have been much easier if we did it sooner.
Of course, because then it's too late. I mean, nobody wants to deal with that situation then. But what about the role of the banking sector? Because could one of the things that you're missing be that the vast majority of money isn't created by the Federal Reserve, but by the banking system, which generates loans, extends credits, and that they haven't been doing this to the same extent that they did before?
Well, the banks are extending a lot of credit thanks to the Fed. They're extending it to the government. They're extending it to buyers of real estate who are buying homes or refinancing their mortgages. There's a lot of money being created. A lot of it is just going to non-productive purposes thanks to the government, thanks to the Fed. But I want to just get back to the idea of inflation and why we haven't seen more of it. Because you're saying, hey, you've been talking about inflation for all these years, and where is it? Well, I still believe that there is a lot more inflation than is generally perceived or acknowledged by the statistics, by the politicians. I've been talking about this poll that Fox News did, a presidential poll that they did a couple months ago, where they polled over 1,200 likely voters, registered voters, and they asked them what their primary economic concern was. And by an overwhelming margin, they answered inflation, much more so than unemployment or housing.
And I hear that. I mean, anybody that shops can see that prices have risen, and many people could argue that the government's inflation numbers are not accurate, but this still isn't the 1970s type of inflation or Zimbabwe type hyperinflation.
Well, there's a big difference between Zimbabwe and the 1970s, but
yeah, but we're seeing neither. I mean, we're not seeing either of those. I mean, sure, higher inflation that maybe some would that's reported by the government, but not the type of inflation that it seems you've been calling for.
If you were to measure consumer prices over the past several years using the same methodology that they used to measure consumer prices in the 1970s, the inflation that we're seeing now wouldn't be that much lower than what we saw in the 70s. And by the same token, if you measured the inflation in the 1970s the way we measure it today, you would find that there was very little inflation in the 1970s either. So it's not an apples to apples comparison. But the other reason that the inflation hasn't already manifested itself in even higher consumer prices than the ones the government is hiding with its phony numbers is because of the accumulation of dollars globally. Because foreign central banks are absorbing so much of the inflation that the Fed is creating, that money is not bidding up the prices of goods, it's bidding up the price of treasuries or the price of mortgage-backed securities. So we're not seeing the inflation's impact fully on consumer prices yet. But at some point, our creditors, the people who have been buying bonds, are going to want to get rid of those bonds and buy real stuff. And then all that inflation is going to hit the United States, kind of like a tsunami.
Right. But in the meantime, Peter, look at the U.S.'s borrowing costs. I mean, here, I'll throw up a chart of 10-year Treasury yields. I mean, we've just seen them really decline. So why, despite the U.S.'s continued borrowing, despite the downgrade of the U.S. credit rating last summer, I mean, how do you explain that Treasury yields are so low? I mean, I understand that eventually people may not want U.S. debt, U.S. government debt, but that day seems far away looking at yields like that.
We don't know how far away that day is. It's a mania. I mean, it's crazy. That's what it is. In fact, the United States is borrowing today at a much lower rate than it borrowed 10, 20, 30 years ago, despite the fact that it's far less creditworthy than we were 10, 20, 30 years ago. You know, we were a better risk back then, yet it cost us more to borrow. You know, it's just like the mentality around the internet bubble or around the real estate bubble. Fundamentally, you can't look for an explanation. It's irrational, right? Irrational exuberance. It is a mania. It is a bubble.
But couldn't you argue that also that if the U.S. wasn't buying treasuries, if the Fed wasn't involved in the bond market, that bond yields would actually be lower?
No, that's impossible. The Fed is the biggest buyer of U.S. Treasuries. So if the biggest buyer wasn't there, you wouldn't have prices going up.
But let me explain. Let me make the case. So one could posit the Fed's actions in the bond market are an attempt to prop up asset prices across the economy, stocks, other things. And if the Fed wasn't doing this and wasn't using the bond market to do this, that asset prices would collapse. And in this situation of deleveraging, people would go into cash, and they go into cash equivalents like treasuries, which are a cash equivalent, and people would pour into a greater extent than now and actually push yields down even further.
No, I don't think that would happen. I think that one of the assets that would be falling under that scenario would be bonds themselves. And I think that's what would hurt the stock market, would be the collapse in bond prices and the corresponding increase in interest rates. It would be rising interest rates that would undermine the present value of stocks. And of course, you also have to look at the impact that rising interest rates would have on the U.S. Treasury. If the Fed allowed interest rates to rise, the U.S. Treasury would be in a position where they had a default. And so I really can't see a big rush to treasuries when the government is defaulting. Because remember, in order to avoid default, we would have to have enormous cuts in government spending. I mean, what we're talking about right now for this so-called fiscal cliff is tiny compared to the amount of spending cuts or tax hikes that would be required to service the debt if the Fed stopped buying and let interest rates rise.
But isn't there another factor in this that plays a role, which is the dollar is a reserve currency? I mean, even if the U.S. prints to infinity, at the end of the day, the U.S. isn't Zimbabwe, it's not Argentina. There is the dollar's role in the globe is very important to many different countries that don't have a replacement as of yet. So doesn't all of that kind of complicate an argument that's like, oh, the U.S. would default on its debt?
Well, if we do print to infinity, then we will be Argentina. We can't print to infinity. And so I think the perception is that we won't do it. I think that people feel that eventually the Fed will do the right thing, that they will withdraw the liquidity when the time is right. So I think the bet is that we're not going to print to infinity, that the Fed wouldn't do that. But I think far too few people perceive how expensive, what the cost would be to withdraw this liquidity. That is the problem, because that is what the economy depends on. It's a phony recovery. The economy is only recovering because of the cheap money, because of the QE. And if the Fed were to try to withdraw the liquidity, it's like pulling the plug. And the economy is going to die. I mean, it has to, because it's phony. We need to get rid of it so we can have a real economy arise to take its place. But I think people are underestimating around the world just how important cheap money is to our borrow and spend economy. And they're overestimating the ability of the Fed to withdraw that liquidity and have the economy continue to grow on its own. It can't. The growth that we're having now is not legitimate growth. It is simply borrowed money that we're spending, and we're counting that as economic growth. The Fed, I believe, knows it. I think that's the real reason it keeps interest rates so low. It's because it knows the economy will implode without it. It knows that the only thing keeping the banks from failing is cheap money. The only thing keeping the real estate market from plunging is cheap money. The only thing that allows the government to maintain the illusion of sovereignty is cheap money, and the idea that the cheap money will perpetuate. But at some point, all these false ideas and phony opinions are gonna collide with reality, and people are gonna wake up. It's gonna be like the emperor's new clothes. Somebody big, not me, but somebody substantial is gonna have to say that I don't see anything. The emperor's naked, and then when that happens, that's it.
And we'll just have to wait and see when that day comes. But in the meantime, that was Peter Schiff. We'll hear more from him after the break. Also still ahead, should we really trust Warren Buffett's suggestion to make Jamie Dimon the head of the U.S. Treasury? Sounds like a suggestion from the Twilight Zone, but we'll discuss it in tonight's Loose Change. First, your closing market numbers. Welcome back. Yesterday was Cyber Monday, and online shoppers, wow, they turned out they spent 30% more on Cyber Monday than last year, according to data reported by the Wall Street Journal. Now, retailers were trying to sustain a 13% gain in total Thanksgiving weekend spending, reported by the National Retail Federation. So is this all a good sign for an economy in the doldrums? The OECD did, after all, just cut forecasts for U.S. growth next year from 2.6% to just 2%. So is this a good thing, all of these consumers spending money, or does it not do much, since chances are many of the goods these shoppers shelled out for on sale weren't made in the U.S.? Here's what Peter Schiff had to say.
Consumption is the reward for economic growth. It doesn't cause growth. It's production. It's because all this stuff was manufactured that we get to consume it. And you're right, most of the stuff that people bought on Black Friday or Cyber Monday was produced outside the United States. And so foreign economies generated that production, and they basically sold it to us, although unfortunately we're having to borrow the money to pay for it. But also, I think if you look at some of the deals that were being offered, I'm not even sure how much money a lot of the retailers actually earned. Because in order to get Americans to buy stuff, they really slashed prices to the point that they might have even sold some stuff at a loss. I'm not sure. But they were really giving away the store in many respects. So yeah, they got revenues, but did they actually get profits? I mean, it still remains to be seen.
Yeah, and deals are not. The reality is Americans can still continue to buy this stuff on the cheap, in part because the dollar has remained strong. Why do you think that is? I mean, you've been calling, or have called, for a dollar collapse in the past.
Well, it's only strong in a relative sense. I mean, if you compare it to the euro, now the Japanese yen has been falling. If you look at the dollar compared to gold, it's been extremely weak, certainly over the last decade. Now, over the last few months, it's weakened a bit, but it hasn't collapsed. And I think it's only a question of time before that happens. I can't tell you exactly how much time, but I know it's going to happen. I think it's going to happen relatively soon. And I also believe that the world looks at the dollar kind of as the best of a bad lot, when in reality it's the worst of that bad lot. And so I think that we unfairly benefit from this false perception, and I think it's more of a self-perpetuating situation. It's only because people perceive the dollar as safe that they buy it as a safe haven. But it's not really based on fundamentals. It's just the reputation, but it's not deserved. I mean, maybe 20 or 30 or 40 years ago that was the case, but that's not the case any longer. And I think when perception finally matches reality, you're going to see the dollar not only weak against real money, but weak against other fiat alternatives that I think, even though those currencies are flawed, I don't think they're as flawed as the dollar.
But Peter, with something like the dollar's strength relative to other currencies and the perception that the dollar is a safe haven, even though fundamentally it may not be, doesn't that perception matter as an investor? Because if you're betting on a dollar collapse right now, you're going to get crushed. The dollar index has been up since 2011. So what do you tell average people?
Well, the average person isn't betting on a collapse right now. I mean, no one is buying, options that expire next month, puts on the dollar index, or, maybe some people are. That's not what I'm advising people to do. So I'm not telling people to bet on a dollar collapse tomorrow. I'm just telling people to prepare for a dollar collapse, because it's going to come. Whether it comes tomorrow, next month, next year, I'm not smart enough to know that. But I can see it coming and know that the only way to prepare for it is to do it as early as possible. Because if you don't do it too early, then you run the risk of doing it too late. And of course, you can't do it too late. Once the train leaves the station, if you're not on it, you missed it.
Are there other factors too, though, that people need to pay attention to that can create dollar strength and keep it there, though? For example, something you talk a lot about is debt. People need dollars to pay debt. So there's a reason why people would have demand for dollars, where there would be demand for dollars.
Well, but we have to borrow all these dollars, and a lot of the debts ultimately can't be paid unless we print more of them, because we're not earning the money. We're just going to have to create it out of thin air. But the perception is what's driving everything. And if you think back to the days of the dot-com boom, when people were chasing internet stocks, nobody cared about the weak fundamentals. It didn't matter that the companies were losing money. It didn't matter, what their business model really was. It was just they were a dot-com stock, and you had to buy it on faith because everybody knew that this was a revolution and it was, a cyber land grab, and you just had to be there and generate revenues and eyeballs and clicks at whatever cost. And people bought this, and they were buying these companies that ultimately never had a chance of making a profit. But it didn't matter, because it was the mentality, it was what people perceived that counted. And then as the stocks were going up, even some of the doubters who weren't buying them early on because they recognized the fundamental flaws in their business model bought them anyway, because the stocks were going up. People were making money on paper, even though the businesses weren't making any real money, operating. But all of a sudden, perception changed, the illusion went away, and the bubble burst, and the stocks collapsed.
Sure, but can we compare this to another currency, Peter? We saw with the yen. The yen has performed tremendously well despite massive public sector debt expansion. Japan's debt is more than 200% of GDP. So what about other currencies? How do you explain that?
Yeah, well, look, the Japanese have a lot of debt, but I still think that if you compare apples to apples, we're in worse fiscal shape than Japan. And the fact that the yen has strengthened, although it's not strengthening now, there's a lot of speculation that they're going to print a bunch of yen. I don't know that that's actually going to happen or not, so maybe the market will be disappointed. But the fact that the dollar has not been able to gain against the yen shows you how weak the dollar really is.
There you go, Peter Schiff, author and CEO of Euro Pacific Capital. With loose change. There's a lot to talk about today, Dimitri. You heard at the top of the show, we played this soundbite of Warren Buffett saying Jamie Dimon would make an excellent Treasury Secretary. Are we living on a different planet? I can't imagine a worse suggestion.
So, I mean, I'm glad that he said it, because everyone that has been following Warren Buffett since at least 2008 knows that this is his MO.
Which is what?
Which
when
is
he was saying that he would write Hank Paulson a blank check?
Right. Not only did he say, "I'll write," that was so he goes on Charlie Rose to do this stuff. He did it with Charlie Rose back on October 1st in 2008, right before TARP, after they originally didn't pass TARP. And Warren Buffett gets out on national television acting all calm. Inside, though, he's panicky, right? Because he had just bought some preferred shares in Goldman Sachs, right?
Yeah.
And Wells Fargo and all that stuff. So he's out there with Charlie Rose, and he's talking about how, yeah, gee golly willikers, Hank Paulson's a swell guy.
Yeah.
There's no one that I'd rather have, leading the Treasury Department. And we should give pretty much a blank check to, this is a quote, I'm quoting the guy now, a blank check to a guy like Hank Paulson, because he's got, quote, the nation's best interest at heart. Well, so this is a load of baloney, and Warren Buffett is...
Let me ask you this, because Warren Buffett, I think, reportedly owns JP Morgan shares, or he said that at some point recently. So do you think that he's trying to suck up to Jamie Dimon with a statement like this, or do you think he wants Jamie Dimon out of JP Morgan?
No. Wait, he owns JP Morgan shares?
Yeah,
so why would he
I
want
read
him out
that
of JP Morgan?
I don't know. Maybe he thinks a different CEO would do better.
No, that's crazy.
Okay.
No, he probably really admires him as an arch kleptocrat. I mean, he probably really respects Jamie Dimon's ability to extract wealth from the economy through the banking system.
Okay.
He's an adroit at it, okay? And he is. I mean, Jamie Dimon's exceptional. He was, his name's protege over at Citi. So.
But the one thing I want to point out, okay, so not only in our terms would it be horrible, I mean, he was at the helm of JP Morgan, where he oversaw that huge London whale trading loss, being kind of the most notoriously, messed up CEO of the year, if that even can be awarded. But with Timothy Geithner, at least, back in the day when the AIG counterparty news came out, Dimitri, I remember going to hearings where members of Congress were asking Timothy Geithner, why shouldn't we have you resign? Why should you even have your job? And Neil Barofsky, in his book, and when we interviewed him, he said that Congress some of the members were good allies for him in fighting the Fed or the Treasury when he was SIGTARP. But look what happens when Jamie Dimon goes to the Hill and sits before members of Congress.
You're obviously renowned, rightfully so, I think, as being one of the most,
one of the best CEOs in the country for financial institutions. You miss this. It's a blip on the radar screen.
I really appreciate you voluntarily coming in to talk with us. But I would like to come away from the hearing today with some ideas on what you think we need to do, what we maybe need to take apart that we've already done to allow the industry to operate better.
When you gamble, on average, you lose. The house wins.
That's been my experience with investing.
And this was when Jamie Dimon was in trouble, and they treated him that way.
Well, these guys, look, I mean, think about what these guys are. These are politicians. They spend their whole career asking for money so that they can spend the rest of it running for office.
Yeah.
All right, so like this guy, Mr. Moneybags comes to Congress.
Yeah.
And Jim DeMint, by the way, come on.
Yeah.
Jim DeMint was like Mr. Tea Party. I'm Mr. Tea Party, whatever. Like,
yeah.
And now he's saying, tell me how we can help free your chains so that you can go rampage more.
I know. Let's move on, because a day wouldn't be complete without talking about the Treasury and the Fed. Have you ever heard about the Fed Challenge? Here is a cute promotional video if you have not.
Fed Challenge provides an opportunity for students and teachers alike to follow real data and explore the dynamics of the American economy. The Federal Reserve banks provide resources to teachers and students through trainings, subscriptions, online resources.
And this is the only competition I've seen where you can actually get the real understanding to be able to articulate what the macroeconomy is about and what the Federal Reserve is about.
So this is where they have high school and college students act like they are Ben Bernanke and try to speak in his language and give a Ben Bernanke-esque type speech, which is ironic because the Fed's issues are with communication, one of them. Today was the 9th annual national finals of the College Fed Challenge.
You said that was a cute video. You tell me what was cute about that. Because that was horrifying to me, but you tell me why that was cute. I'm all ears.
Because they're kids. Kids are cute, Dimitri.
There's nothing cute about kids going and acting like court jesters in front of the despotic monarchs. And the priesthood, the monetary priesthood.
Yeah.
Look, you know what? When I saw this,
Dimitri? Hurry, because I want to get to the last story.
Wait, hold on. Forget the last story a second. This is nuts. Isn't this actually kind of crazy? Just think about it. You actually bring people, indoctrinated youngsters, into your like Mecca, and you have them perform as though they were you. Where else does that happen? You tell me one company on earth where the management brings in people to act like them. That's only in like the most despotic, dystopian worlds where you have like established like authoritarian rulers that are like.
You have to learn the double speak young. You got to get it ingrained.
The only thing, let me just say one thing. The only thing that we're missing is a pit full of tigers and snakes to throw descendants into.
Okay, fine. Well, maybe you can arrange
Dissidents, not descendants.
In the meantime,
I'm struggling here, people.
Dimitri, I just want to touch on this because Intrade has said that Americans can no longer bet on Intrade because the CFT sued them. And Intrade, it basically is the new Swiss banks. They say, we don't want American customers. We don't want to deal with American regulations. So what's going to happen with all the bloggers during a presidential election where they're going to Intrade to see what's going to happen?
They're going to start making more sarcastic and annoying tweets. That was just, if you ever watch the
Okay, well, people are going to have to take your word for it because we're out of time, Dimitri. We're out of time. Thank you for watching, though, and make sure to come back tomorrow. And in the meantime, you know you can follow me on Twitter. You can like our Facebook page. You can watch us on YouTube, comment. You can see us in HD on Hulu. And from everyone here, thank you so much for watching, and have a great night.